If your family holds its wealth through a UAE foundation, a trust, or a holding company, you are probably relying on a particular tax treatment. In June 2026, the FTA updated its guidance on these specific structures, and some of it has a real commercial edge. By the end of this video, you will know what actually changed. The one entity in a typical family group most likely to need a separate corporate tax review, and the handful of things worth checking before your next return. Article 17 itself has not changed, but the updated guidance gives more clarity on how the treatment should be applied, documented, and supported. Families often set up a foundation or a trust to keep wealth organised and protected, and then assume the tax treatment simply follows. In the UAE, Article 17 of the Corporate Tax Law allows a juridical family foundation to apply to be treated as fiscally transparent, provided the conditions are met and the FTA approves the application. In simple terms, that means the relevant income, assets, and activities are attributed to the beneficiaries for UAE corporate tax purposes, rather than taxed in the foundation's own right. Unincorporated trusts may be transparent by default, but the family foundation conditions still need to be checked. In June, the FTA published an updated version of its guide on the taxation of family foundations, replacing the first edition from May 2025. Article 17 itself did not change. The guidance around it became clearer and more detailed. Let's start with what did not change. A juridical foundation or incorporated trust that genuinely meets the Article 17 conditions, with the right application submitted and approved by the FTA, can still be treated as fiscally transparent. An unincorporated trust may be transparent by default, but it still needs to meet the family foundation conditions if the structure relies on family foundation treatment. What the FTA added is clear treatment of the parts around it. The headline addition is family offices, and this is the part with a commercial edge. A single or multi-family office can be a company wholly owned and controlled by a family foundation. But because of what it actually does, managing assets and charging fees, it is unlikely to meet all the Article 17 conditions, in particular the one that it does not carry on a business that would be taxed. So the FTA's position is that a family office is generally subject to corporate tax on all of its income, including management fees. And because it deals with the family's own entities, it must charge those fees at arm's length, in other words, at a genuine market rate. There is a free zone route with conditions that matter. A family office in a free zone may reach the 0% rate only if it qualifies as a qualifying free zone person, and the relevant income is qualifying income from qualifying activities, such as wealth and investment management or fund management. For those services, the updated guide stresses that the activity must be under the regulatory oversight of a competent UAE authority. The guide names the central bank, the DFSA in the DIFC, and the FSRA in the ADGM. A family office that merely holds a license without that oversight does not get there. In plain terms, the 0% rate is earned by meeting the qualified free zone person and regulatory conditions, not by sitting in a free zone. Two more additions are worth knowing. The guide now explains how assets put into a foundation are treated. Where the person transferring them is a related party, the transfer should be at arm's length and can carry a corporate tax consequence. There is an important carve-out where the transferor is a natural person, and the assets qualify as personal investment or real estate investment assets under the natural person exclusions. And it confirms that a company moving into a family foundation does not automatically become transparent. That still needs the conditions met, the application made, and FTA approval. Importantly, there is no reset of the base cost of that company's assets when its status changes, which matters when those assets are later sold. Here is the through line. The tax outcome of a family structure now depends heavily on evidence. Evidence that the foundation genuinely meets the conditions, that transfers in were priced and documented at arm's length, that any family office charges market rate fees under proper agreements, and that base cost and ownership history are tracked through every change. None of that lives in the foundation deed alone. It lives in the bookkeeping, the transfer pricing file, the intercompany agreements, and the corporate tax registrations, transparency applications, FTA approvals, annual confirmations, and supporting records. A clean structure on paper with thin records behind it is exactly the position this guide is nudging families away from. So what is worth checking? First, confirm the status of each entity in your structure and whether the right Article 17 application was submitted, approved, and remains supported by the facts and records. Transparency is not a one-off filing position. It relies on ongoing compliance, including the relevant application, FTA approval where required, and annual confirmation that the conditions continue to be met. Second, identify any family office in the group and confirm how its income, especially management fees, is being taxed, and whether any free zone 0% claim rests on genuine regulatory oversight. Third, check that fees and recharges between the family office and the family entities are set and documented at arm's length. And fourth, make sure base cost and ownership history are documented for any company that has moved into or out of the structure. The simplest way to think about it: the FTA didn't change the rules, it sharpened what you need to prove. Legal counsel should review the deeds, governance documents, and licensing position. Audiix supports the financial, corporate tax, and documentation side. This is general information, not legal or tax advice, so talk to your advisors about your own structure. If you want a second pair of eyes on your records, applications, FTA approvals, annual confirmations, and pricing, Audiix can help you review whether the treatment you are relying on is properly supported.